What is capital gains tax on inherited property sales? Imagine inheriting a property that has appreciated in value over the years. You might wonder how much of that gain will be taxed when you decide to sell. Understanding capital gains tax on inherited property is key to making smart wealth-building decisions through real estate. When you sell an inherited property, the tax is based on the profit you make from the sale, not the original purchase price of the property. This profit is called the capital gain. But here's the good news. The IRS uses a special rule called the stepped-up basis. This means the property's value for tax purposes is reset to its fair market value at the time of the previous owner's death. For example, if your parent bought a house for $100,000, but it was worth $500,000 when they passed away, your basis becomes $500,000. When you sell the property later, you only pay capital gains tax on the difference between the sale price and that stepped-up basis. So, if you sell the house for $510,000, your taxable gain is only $10,000. The IRS treats these inherited property sales as long-term capital gains, no matter how long you hold the property after inheriting it. This means the tax rate can be 0%, 15%, or 20%, depending on your income. If you sell the property within a year of inheriting it, you might face short-term capital gains rates, which are usually higher, but that's less common with inherited assets. If the property is owned jointly, the capital gains tax is divided based on each owner's share. When calculating your gains, don't forget to subtract selling expenses like real estate commissions, title fees, or any improvements made after inheriting. These costs can lower your taxable gain. For families focused on building wealth through real estate, understanding this tax rule is important. The stepped-up basis helps preserve more of your inherited property's value for future generations. It allows heirs to decide whether to sell or keep the property without facing heavy immediate taxes. This can be a powerful tool for creating lasting wealth. Remember, the tax applies only to the increase in value after inheritance, not the entire appreciation over the original owner's lifetime. This benefit makes property inheritance a smart way to grow wealth across generations, especially for Black families working to pass down assets and build financial stability.